Statistics South Africa says the gross domestic product grew by 1.2% in the quarter, following a 1.7% contraction in the third quarter. Economic growth for 2021 is 4.9%, in line with expectations. 5 industries recorded positive growth between the third and fourth quarter of last year. The agricultural sector continued to show resilience, growing by 12.2%, mainly due to increased production of animal products. Production in the mining sector decreased by 3%, with decreases in production reported for iron ore, gold and coal. The manufacturing sector increased by 2.8%, with the largest contribution recorded in the petroleum, chemical products, rubber and plastic products categories. The trade, catering and accommodation industry increase supported by retail trade, motor trade and catering and accommodation services. Positive performance in the fourth quarter was supported by easier lockdown restrictions, allowing for more movement and economic activity. And now a nice bounce back in the fourth quarter from that horrid third quarter, of course. And so for more on this, let's now speak to Nicky Weimar. She's the chief economist at Nedbank. Thanks very much for joining us, Nicky. Of course, we know it was a torrid third quarter last year, what with COVID infections increasing and also those dreadful July riots, which cost the economy about 50 billion rand. A nice bounce back in the fourth quarter. What were your key kind of highlights and lowlights from the data that you've just looked at?
Yeah, I think everything pretty much turned out, as you said, it was in line with market expectations. So there wouldn't have been any major surprises. We already saw in the monthly production and income numbers and sales numbers where the movement would have been. I think the good news is that agriculture remained fairly resilient. This was one unknown with the heavy rain we had. So a good quarter for agriculture once again, and supporting the economy, making a positive contribution to GDP. And then I think generally speaking, we all anticipated that you would have a bounce back in things like retail sales, hotels, accommodation. A little bit of a cloud was hanging over it from us experiencing a fourth wave, but we already knew that the fourth COVID wave didn't have such a massive effect because we had the monthly numbers. So it's encouraging that consumer spending normalized. It was up 2.8% over the quarter. It's also encouraging that we had a relatively good performance from manufacturing and we had a good performance from agriculture. I think the bits that were a little bit worrying is that you saw weakness in your sort of finance, real estate and business services, which is a very large sector and therefore has a significant impact. So that is not awfully good news. And then clearly from the mining perspective, that was disappointing as well. One would expect that South Africa should really exploit on times when the world economy is growing and commodity prices are high. So we didn't see that experience come through. But generally the economy normalizing, we're ending 2021 at least on a firmer note. But yeah, the bounce back has come really from where I think almost everyone anticipated it would come from.
The economy seems to sort of, stop and start, just as we end 2021 on a relatively good note, then we get into 2022 and now suddenly there's this Russia-Ukraine conflict which is affecting us, from an inflation point of view. Fertilizer prices have gone through the roof, wheat and maize and other grains have gone up. The petrol price hitting $140 a barrel. So what does this then mean going forward for the local economy?
Well, I mean, obviously it introduces an enormous amount of uncertainty. And as you said rightly, we've had a very stop-start recovery. Even as we came to the end of 2021, we were still not back to pre-pandemic levels. We were very close, but we were not back. And at the same time, we've had to absorb all sorts of other shocks beyond the pandemic, beyond lockdown, like the riots, like, persistent and constant electricity shortages, which we are currently or again stuck in stage 2 load shedding. So this is an economy that's really had to absorb more than its fair share of shocks repeatedly and repeatedly and repeatedly. So it's actually astounding that we have managed to crawl our way back to the point where we are now. And now we face an additional uncertainty. And that uncertainty obviously has, for South Africa, given that Russia is not enormous in our lives, exports and imports combined is 0.6% of our total trade. So it's not significant. But the reality is that we will feel the effect primarily through higher global oil prices. And if ultimately you do have an incident where there is a major sort of risk-off move in the markets because the US is hiking interest rates more than people anticipated, or they are starting to reduce their balance sheet more than people anticipated, and as a result you have significant risk-off among global investors, then you could have a situation where the rand comes under pressure. So far the rand is very volatile. It is trending weaker, but it's not imploding. So if we have high global oil prices and a weak rand, then that could be very, very damaging to us. We're obviously going to have higher inflation. It's probably going to last longer than we thought, and that is going to result in a continued tightening of monetary policy. So at this point, given where we are, I think we get at least a little bit of a benefit in that we've seen other metal prices run as well. So we've seen gold was hit $2,000 per fine ounce mark yesterday. So I'm not sure where it is exactly now, but the reality is we get at least that benefit. The other metal prices where sanctions have been imposed against Russia, that creates an opportunity for us as well, and we at least get the benefit of higher prices there. So we at least we have a little bit of a benefit from the situation. It doesn't completely offset the negative impact of higher oil prices, the erosive impact that has on household incomes, in the sense that you've got to spend so much more just to fill up your petrol tank and for mobility, for taxi fees, for energy, and that really limits your sort of disposable or discretionary spending. It doesn't completely offset that, but at least there's a bit of balance. Yes. So I think we'll ride through it in a reasonable way, but the point where it becomes dangerous, I think, is when the rand also implodes.
Nicky, thank you very much. More to talk about, but not enough time. Nicky Weimar, she is the chief economist at Nedbank.